Hi traders, this is Senior Account Manager Adam Howes with Forex Capital Trading, hosting the Daily European Open for this Monday the 14th of the 8th. Hope you had a good weekend. We saw a lot of move on the market on Friday in relation to inflation data from the US. And we've got a bumper week of economic announcements this week that will provide, obviously, further volatility for the market. Also looking at, the continued US North Korean situation being intensified. Obviously, a lot of mudslinging with fire and fury and locked and loaded comments from Trump. No doubt that's going to, create some further volatility, but we'll get into it and we'll see how the market's shaping up for this week. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice, and Forex provides general advice only that does not take into account your personal needs or circumstances. Okay, just coming off the risk events from last week, we had a look at one of the major drivers in the market, one of the main economic announcements being paid attention to, which was obviously the USD Consumer Price Index year on year for July, and also the Index X Food and Energy year on year July also. We had the second figure coming in banging at 1.7% as expected. We had a slight tail off, a slightly worse than expected result on the Consumer Price Index for year on year July at 1.7% against 1.8% forecast. Now, with inflation as a measure of the cost of a basket of goods increasing over time, the market will be looking to that figure as a likely clue for the Fed raising interest rates. If we were getting a higher than expected reading with an overheated sort of prices in the economy, that might actually provide, further impetus or further incentive for the Fed to raise rates. But in this case, 1.7%, is a bit of a lackluster result. Hasn't really sort of stemmed the market to place too much more confidence in the US dollar at the moment. And as such, the US dollar had a bit of a spike, as did gold, but we saw sort of gold resume its bullish trend to close out the week at around about 12.90, and the US sort of went further bearish as expected. So looking forward to this week, let's just do a quick synopsis of where we're at in terms of risk events. We'll just go to a weekly view here. So we had the yen with gross domestic product annualized for the second quarter. Much bigger result than forecast. We had a 4% increase as opposed to a forecast of 2.5%. That's on the backbone of an already strong yen. We saw the yen sort of being back very much over the course of last week, not only as a risk asset, but obviously global speculators having to pay back yen-based loans. So obviously we saw the yen sort of following suit in quite a strong direction to the north, driving such pairs as the USD JPY down. Tomorrow we're coming up to the Euro-German gross domestic product, and also the very importantly, the GBP Consumer Price Index. Now, with the itemized euro announcements here, it's not these two announcements aren't holistic sort of euro gross domestic product measures. They're actually for the German and obviously for the Italian market. Look, it will move the market somewhat. Obviously, the Italian share market would react to this sort of announcement, as would do the DAX on the German GDP as well. But the main sort of overall measure of the Eurozone gross domestic product year on year second quarter is going to be really sort of paid attention to and scrutinised, coming in at 2.1% forecast. So we'll wait and see mode on that high impact announcement. Very important announcement for the pound coming up on Tuesday, tomorrow night at 6:30 Australian Eastern. The consumer price index for year on year, and then the core CPI as well, year on year for both July, coming in at 2.7% and 2.5% forecast. That's already on the backbone of a weaker pound rather. With the pound sort of retaining a bit of a bearish sentiment following that interest rate announcement to keep rates on hold at record lows at 0.25%. Obviously, growth forecast was downgraded from the bank chief Carney as well, so that added to a further bearish tone on the GBP. But don't forget, it's really been about the weakness of the US of late. So that pair has kind of consistently sort of held ground against an otherwise weaker US dollar, particularly on the GBP USD. Coming up to Thursday at 4 o'clock in the morning, we've got the USD FOMC, the Federal Open Market Committee meeting minutes for July 26th. and that will provide some direction from Yellen on dovish or hawkish stance on the Fed in terms of raising rates or keeping them where they are. Sort of the urgency of what rate increases hold for the market is what's really going to be keenly paid attention to in the market. If the Fed are more likely to, give a bit of a hawkish tone in the market about raising rates over a period of time with increased urgency, then we could look at the USD gaining strength. But the inflation data coming out on Friday hasn't supported that, and at last reading, a September rate increase of 40% is likely, which is not a compelling result for the market. So we're really seeing, continued weakness of the USD across the board. Interesting one as well for the Aussie dollar, the range-bound Aussie. At 11:30 on Thursday, we've got the AUD employment change and the AUD unemployment rate. AUD unemployment rate held at 5.6% on the last announcement. This announcement comes out once a month for the employment data. So 5.6%, pretty much staying on on hold at the moment for the AUD. But the big driver of the market last time was that massive increase in full-time employment, which saw a 60k increase in jobs, and that saw a massive spike for the AUD. So look, we might, in all honesty, on strong GDP figures and a stable unemployment rate, be seeing better than forecasted employment numbers. And obviously, if that's the case, then all things being equal, should be taken as bullish for the AUD under normal circumstances. So 20k is pretty modest. We may see a higher than expected result than that, which will propel obviously the AUD to fresh highs from where it is. Coming up to Friday, we've got the CAD Consumer Price Index year-on-year July as well, 1.2% forecast. Again, similar set of circumstances, higher than expected CPI readings, raising expectations of future rate increases, bearing in mind that the CAD had already raised rates to 1.75%, so, pretty historically high compared to other, majors on the market. And then heading ahead to in my mind, a bit of a lackluster announcement. It does move the market somewhat, but, the market is really about inflation and interest rates primarily. But there is an announcement coming out for the USD University of Michigan confidence or business confidence. Basically an index of measurement, of the confidence of business managers across the nation in terms of how confident they are in economic conditions and GDP prospects, etc. But the main ones to pay attention to this week, if you're trading around the pound, obviously on the CPI, and on the USD FOMC minutes, they'll both move the GBP USD and obviously other USD correlated pairs. And the big one to watch for on Thursday will obviously be the employment change and unemployment rate at 11:30 Australian Eastern. So looking ahead to the markets at the moment, we've got a bit of a, traditionally and usually a lackluster start to the Forex calendar or market activity at the start of the week. The market's in pretty much full swing by PM on a Monday when the market opens at 5 o'clock for the London Open. But at the moment, what we're seeing is, technically, broadly speaking, pretty shaky US conditions at the moment, and that's really sort of seen the Aussie hold ground above the pivot level here at 78.62. You've got a situation here where the opening of the daily candle has been quite bullish. Got a good sort of entry point on Stochastics Daily at the moment. Under these sort of conditions, it looks favourable for a buy at the moment under such conditions. And using the pivot as a generalist level of stop in that market may seem as ideal. Similarly with the euro and the pound against the US dollar, we're seeing, that strong upward trend persisting. It's obviously more prevalent on the euro against the US rather than the pound against the US. But we're seeing, good entry points and probably good sentiment for the euro at the moment, depending on the GDP, obviously. But against that weaker US dollar, we're seeing that upward channel continuing on the euro, which Trading Central have on a buy at the moment, and obviously on the pound against the US dollar too. US has recovered some ground, obviously from the low on Friday night with that inflation data. Let's just go back in time and let's just have a look at exactly what happened around that announcement because, looking back, at previous announcements and seeing the reaction can be actually a good gauge for, future rate increases. So this was the time around the announcement, around the 22.30 mark. And if we scroll out a little bit, this exactly here, this was kind of like the hour candle where we had a big spike upward and downward. Now, when you see that sort of activity happening in the market, obviously there's a huge amount of buyers and sellers paying attention to that announcement, huge amount of entry orders. So sometimes, look, unfortunately, that does happen. You get a big spike upwards and downwards, even though the announcement was negative. pretty much the price ended up back to where it started before the announcement, and actually the USD as forecasted ended up lower at the end of the trading week. It has recovered some ground, but obviously because some buyers have found that to be sort of a good deal in the market to come in at that level. But now we're seeing a bit of a recovery, obviously for the US dollar. Testing the pivot currently on the daily at the moment on the hourly. But if we do go out to a daily time frame, it's not really signifying a break in trend line at the moment on a daily time frame. If this were to be broken here at the 111 level, then maybe. But price doesn't go down or up in a straight line. Be great if it did, but obviously it doesn't. So we're seeing some recovery from that support level there again. We'll be looking ahead to the FOMC minutes and obviously continuing dialogue, continuing relationships, which are already very shaky between the North Korean regime and Trump. And if we continue to see, mudslinging, and if we can continue to see sort of, really inflammatory comments, particularly around Trump, being quite hot-headed in the whole debate, then we could see, further decrease on the US dollar. Conversely for gold as well, gold's seen that meteoric rise. Actually ended up the last trading week higher at around about 1290 ultimately. And, traditionally we're seeing a little bit of profit taking coming in there. So we knew that was going to be a critical level there at about the 1290 to 1295 level. Fundamentally as a risk asset, it may seem good to buy that at this point. But don't forget, it's all about entry point too. Entry point dictating that you might see a little bit of selling pressure coming back into the market at the moment where profit taking is happening, before the market ultimately sort of reaffirms that uptrend and, again, starts to spike upwards on fundamentally a risky outlook for global events at the moment, obviously with the North Korean crisis. Similarly with the obviously the GBP against the JPY, that downtrend persisting on a stronger yen has found support. Ultimately, we want to see it test this level here at 143.90 or 144 before we decide whether or not that's actually going to be further sort of bullish in this market. We're currently trading convincingly below the pivot level and below our trend line. That downtrend has not been broken just yet, so this might be a little bit of profit taking coming back into the market before we ultimately see the yen regaining strength against, I'm not going to say the weaker pound, because the pound is, fundamentally strong, but, the yen might prove to be stronger in that case. Again, with the oil, we've got a bit of a consolidated mode happening at the moment on oil. They'll be looking forward to production cuts and production output figures coming up later in the month as well with OPEC. So there's no further commentary at this stage about oil. It's really about sort of getting into the market week and seeing how that'll move, but obviously a pretty quiet start to oil. If we have a look at our own index as well, the XJO, that's on XJO on TradingView. Saw a massive sell-off on Friday on risk aversion in the market, and the Aussie had followed suit, but we've seen a broad recovery, and that's really, really good entry points for these sorts of trades. Remember that, bad news is, or people always overreact to bad news, and when we look at, bad news being the main driver, fear being more powerful than greed in some circumstances, it pays to be greedy when others are fearful, and we would have had a really good entry point here to, further buy in the otherwise, it was negatively perceived as quite risky on the ASX, but, a number of buyers have managed to put the price up or push the price up to 5728 at this stage. So looking ahead to the market week, the prevailing theme really will be about FOMC. The market, that'll be the height of the trading week, probably the FOMC marketing minutes at 4 o'clock on the Thursday. If we see more sort of dovish comments from the Fed, then that should already add to an already weaker US across the board against the yen particularly, and also be quite bullish for gold. But, a lot of traders are buying gold or actually staying in the gold positions right now. We're seeing some selling pressure happening, but that's not really a break of the trend. So just remember, it doesn't go in a straight line. Okay, obviously we'll get some profit taking happening along the way as well. Just before you go today, just like to introduce another resource to you with respect to these marketing opening hours as well. And that's the 24-hour clock. Get a lot of questions from traders about what time the Forex market is open around the world, because obviously it's open 24/5. So we're just going to take a quick look at market 24-hour clock, or market24hclock.com. And this will obviously give you, with respect to my time zone at the moment, coming up on 4:15, coming up to, obviously, we're still in the Tokyo session, or just actually finished, sorry. Just finishing off the Shanghai session. As you can see, the London session here opens at 5. So this is quite a handy little resource because it actually updates respective to the daylight savings times, respective in our hemisphere and obviously in New York as well and across the world. So you've got the market open for the London Stock Exchange happening at 5 o'clock Australian Eastern. Do the conversions for your time zone, obviously. And then coming online at 23:30, we've got the New York session, NYSE, the New York Stock Exchange, and obviously all the other US-based indexes as well coming back online at 23:30. So if you need a copy of that website, please let your account manager know. But just make a quick note of it if you can now, and therefore you can go in and start using that to your advantage to know exactly when the main volatility is going to be around the day, which we know most of the time is around the London Open session at around about 5. So overall, over coming weeks on these sorts of webinars, we'll be concentrating mainly on fundamental risk events. Okay, they're the ones that really move the market. The whole foundation of a trade, the whole foundation of market movement is obviously around the fundamentals. Okay, the sentiment of fear and greed, of how confident one is in a particular currency over another. Now, that may sound pretty elementary and simplistic, but it is just about that. It's about sentiment. Okay, if we diagnose what the correct sentiment is or what the overall prevailing theme of the market is, it becomes a secondary exercise to look for good entry points on such positions across these currencies and obviously on gold, oil, and the ASX as well. But for the time being, thank you very much for your attendance today. Really appreciate it. We look forward to seeing you at the next webinar tomorrow for the Daily European Open. If you have any questions in the meantime, please get in contact with us at ForexCT. We'll be happy to help you. Thank you very much for your time. Thank you.